As of right now, I'm sure it's no surprise to all of you that economy is not doing very well. A lot of financial instruments are tanking, things like your stocks, your crypto market, watches, a lot of asset class are not performing very well. So a lot of my clients are actually asking me, when will we see Singapore property owners not being able to pay their mortgage, defaulting on their mortgage, and the banks have to take it back, and we might start to see a fire sale properties in the market in Singapore. So I'm just going to explain certain fundamentals to you right now so that you are able to calculate the probability of being able to find Singapore property owners who are going to default on their mortgage because they cannot afford the rising cost of holding on to the property. So the first thing we need to understand is that when a person in Singapore wants to buy a property, they tend to take a loan. So they go to the bank, and how the bank access how much money they're going to lend to this person is by looking at three things. Number one, the income versus liability versus a 3.5% interest stress test, which basically means above and beyond just looking at your income and your liability, they paint a scenario where interest rate is 3.5%, and looking at your situation in totality, determine whether or not you will be able to finance the loan if interest rate goes to 3.5%. So it's quite safe and clear to say that whoever who has bought a property, have taken a loan from the bank, they have all passed the 3.5% stress test. And as of right now, although interest rates have went up 100%, went up from 1% all the way to right now is about 2.1%, and it's expected to go to 3%. So up until the point where interest rate goes past 3.5% to 4%, I do not foresee people struggling to pay off their mortgage. Unless, of course, if there is a recession, people lose their job, they no longer have income, and they did not prepare funds for rainy days, then we might experience that phenomenon of property owners not being able to pay off their mortgage and hence having to surrender it to the bank, and you might potentially get a fire sale unit. And the second thing that the Singapore government does to ensure that Singapore property prices doesn't just crash is by reducing the loan to value. So once upon a time in Singapore, if you wanted to buy a $1 million property, all you needed was 10% of 1 million, which is $100,000. And over the years, the Singapore government has increased the down payment. So right now, for you to buy a $1 million property, your down payment is $250,000. So this is to ensure prudency. The Singapore government just wants to make sure that you have at least 25% of your intended purchase amount before you are able to go through with the purchase. So with these two measures being set in place, the 3.5% stress test from the bank when they are accessing your loan, and the increase of down payment set by the Singapore government, it is quite safe to say that anybody who has bought a property in Singapore recently, firstly, they can afford 1/4 of the property price before they even proceed, and they have already been put under the 3.5% stress test, and the bank already knows that even if the interest rate were to go to 3.5%, these people will still be able to afford the mortgage. Unless, of course, they lose their job, they no longer have income, then that becomes a problem. So when you understand loan to value and how the banks access your loan before they grant you the loan to buy a property, this would help you to determine the probability of you being able to find an owner who might potentially default on their mortgage and potentially having to surrender the property to the bank, and you might potentially get a good deal.